Test, almost. A DCP error has occurred. Please update your firmware to the most recent version. Okay. Test. I'm trying. Okay. I think that's good. Let me go check. There's some sort of DCA error or something like that. Let me check over here. Make sure that it's golden. I'm trying. All right. Okay. Cool. All right. I think it's all fixed. So apparently we had some sort of firmware error on the Go XLR. I've never had that happen before. So yay, technical difficulties. I think we're sorted. And then it had some other weird error, but rebooting the software fixed that. So rebooting the Go XLR gave me the error that then allowed me to, I don't know, fix it. So there you go. Anyways, let's reset. Oh, by the way, I guess whatever. Now we're chilling. Got that BBT coffee cup. Make sure you guys go subscribe to Bits Be Trippin'. He's going to help you survive a bear market better than I will. All right. So, good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I apologize for the technical difficulties and thanks for bearing with me as we got them sorted. Today, the primary story we're going to be covering is Solana and basically how it shouldn't exist anymore. And the only reason they do exist is thanks to Binance basically saving their butts. That is what it is. I mean, that is the truth. That is what's happening. We'll get into more detail later on in the show. Harmony attacker moves over 44 million worth of stolen Ethereum and authorities are alerted. Luxor decides to launch a hosting marketplace for Bitcoin miners. And that's crazy, primarily due to the fact that they have build-out delays, which sounds like to me they can't fill up their farm with miners. Then we're going to be talking about the yield of dreams in AnettaBTC and how they're planning on working out the wrapped Bitcoin on Cardano and Ergo. We're going to be taking a look at when, of course, we can expect the Gray Glacier upgrade to reset the difficulty bomb on Ethereum. Ethereum mining profits are up a little bit too, thanks to the decrease of hash rate on the network. I have a very long thread about Bitcoin miners and which ones you should be following as far as market moves are concerned. The final Toncoin was mined, and they are now going to be solely proof of stake. AMD is next to get hacked. Ransom House Extortion Group claims to have stolen 450 gigabytes worth of data. And then we have a few more specifications on the RX 7000 series GPUs and the LolMiner version 1.52a release. So that is pretty much all we got going on today. I'm going to go ahead and run the ad and make sure to sponsor crypto, or to use the code down below if you're signing up for Crypto.com, because they are the sponsor of the show and they're keeping us running through the crypto winter. So huge shout out to them. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, everybody. So first things first, we like to cover those miner releases. We have a new one from LolMiner. Let's get it pulled up. That is the wrong thing. That is GitHub from yesterday. Let me get that fixed. I think we were taking a look at something sneaky that you should be following on locals if you want. But all right, so version 1.52a released 2 hours ago. They fixed a bug that can sometimes cause the pool hash rate to halve after multiple reconnect attempts in a row, and they adjusted behavior of the light hash rate unlock feature, so solve issues with some configurations occurred in 1.52. I think there's a little bit of broken English there, but just a couple fixes. Nothing really crazy going on here. If you want to give it a shot or update to it on a couple miners, definitely feel free to do so. And let me know what you guys find in the comment section or the live chat or locals or on Twitter or wherever you like to communicate with me. That is where we're at. So we also have the 7000 series graphics cards re-architected RDNA 3 GPU compute units to deliver enhanced ray tracing capabilities and even higher clock speeds. AMD seems to have confirmed that its next-gen RDNA 3 GPUs for the 7000 graphics cards will deliver enhanced ray tracing capabilities and even higher clock speeds than RDNA 2. I mean, that's kind of expected, right? There are a lot of things that were overlooked during the AMD Financial Analyst Day 2022. Things like the fact that AMD confirmed its Zen 4 3D V-Cache Ryzen CPUs coming later this year. I'm excited for those. Another key comment was missed out came from AMD's Senior Vice President of Engineering at Radeon Technologies Group, David Wang, who confirmed that AMD will be delivering enhanced ray tracing capabilities with their next-gen RDNA 3 GPUs. It is also our first gaming GPU in reference to RDNA 3 architecture that will leverage the enhanced 5nm process and an advanced chip packaging technology. And another innovation includes an architected compute units with enhanced ray tracing capabilities and optimized graphics pipeline with an even faster clock speed and improved power efficiency. And to bring more photorealistic effects into the domain of real-time gaming, we are developing hybrid approaches that take the performance of the rasterization combined with the visual fidelity of ray tracing to deliver the best real-time immersive experiences without compromising performance. Lastly, our next generation multimedia will support advanced video codecs such as AV1 to deliver high quality video streaming and reduce latencies and bit rates. We will also improve our display capabilities with the new DisplayPort 2.0 standard to support upcoming HDR displays with high resolutions and refresh rates. Some of the key features of the GPUs highlighted by AMD will include a 5nm process node, advanced chiplet packaging, re-architected compute unit, optimized graphics pipeline, next-gen Infinity Cache, and as we've talked about before, greater than 50% performance per watt versus RDNA 2. According to David, AMD has re-architected the compute units within RDNA 3 that deliver enhanced ray tracing capabilities. Although there's no mention of what these capabilities are, but if we're to guess, we would say it's definitely they're definitely talking about performance and a set of advanced features on the RDNA 3 GPU core for the Radeon RX 7000 series graphics card. AMD's RDNA 2 GPU-powered 6000 series were the first to feature ray tracing capabilities on the Red Camp. They were a generation behind NVIDIA, who introduced them first 2 years prior on their Turing graphics architecture and fine-tuned it further to deliver better performance in the second generation on Ampere. With RDNA 3 GPU-powered 7000 pitted for launch this year, we can expect AMD to offer a similar jump in performance or even exceed Ampere's ray tracing capabilities. But the real challenge ahead would be to rival NVIDIA's third-gen ray tracing cores, which are expected to debut on the Ada Lovelace-powered GeForce RTX 40 series. Besides ray tracing, David also mentioned that the optimized graphics pipeline for RDNA 3 GPUs will allow for even higher clock speeds than RDNA 2 GPUs. The 6000 cards already run close to 3 GHz, so with an improved 5nm process node, we can expect AMD to breach past the 3 GHz clock limit. That's going to be just cool. This is essential for AMD as their competitor isn't holding back either, with the 40 series rumors also hinting at up to 3 gigahertz clock speeds utilizing the more efficient 4 nanometer process, which is an optimized 5 nanometer process node. All of these features combined with the next-gen Infinity Cache solution, advanced packaging tech, and a 50% performance per watt improvement will result in a highly competitive graphics solution in the form of the Radeon RX 7000 series graphics cards. Plus, the rumor mill is also reporting a more powerful RDNA 3 Navi 3X GPU in the works for 2023, which is expected to be a monster of a chip, but whether that comes to the gaming segment or remains pro-only offering remains to be seen. That 3X, like we talked about, that one looks crazy cool because they essentially are going to have potentially two 384-bit buses on GDDR6 with 32 gigabytes of memory. I don't think that we will see that necessarily on a, desktop lineup. I think it will be a Pro Series GPU or workstation GPU at best, or a data center GPU at worst. But either way, it will be extremely curious to see how they work that, because for mining, it could be absolutely insane. So that's kind of what I'm looking forward to. This Navi 3X, 384-bit by 2 GDDR6. Plus, they're supposed to be getting that faster GDDR6 on it. So as far as the 7000 series goes, it looks like we are confirming over 3 gigahertz on the core clock, which means for algorithms that favor core, right? We could see a pretty big improvement on things like Flux, Ravencoin, etc., or even go into better dual mining with Aliphium and so on, right? So that's kind of what I'm looking at as far as where the bigger performance improvements will be. Now at the top end, the 7900 XT and the 7950, if that comes out later as well, are supposed to have 384-bit buses. Remember, on the 6000 series, we only got a 256-bit bus at the top. So we should be seeing as well at the top end some better memory algorithm performance as well. So it's kind of the whole lowdown so far on the 7000 series. AMD got hacked, though, apparently, too. Ransom House extortion group claims to have stolen 450 gigabytes worth of data. That's really not a ton of data, but depends on what type of data that is, right? After NVIDIA, it looks like AMD is the next to be hit by major cybersecurity attacks, with 450 gigabytes worth of data stolen by hacking group Ransom House. Ex-cybersecurity reporter Caitlin Simpanu, something like that, states that Ransom House, a hacker and extortion group, is claiming that they have stolen data from AMD. There are no reports as to when this hacking attempt was made, but there were rumors of AMD being hit by a cyber attack this year earlier. Ransom House is claiming to have breached AMD's network on January 5th, 2022. On the group's darknet website, they are claiming to have exfiltrated more than 450 gigabytes of data from AMD and have also published a data sample as evidence. We examined the data sample included network files, system information, as well as AMD passwords obtained in the alleged breach. Below is the file tree of the sample that Ransom House has published on its darknet website earlier today. This looks like it's just like a slide. It's funny. They're giving like presentations now. Hacker groups are like, let's get a PowerPoint up, ready to go. Please post that. We just need to make sure that we extort the maximum amount of money out of these companies. So make sure it looks good, right? Ransom House claims that they didn't deploy any ransomware, so it might have been a failed attempt in trying to monetize some stolen data. The group claims that they were able to steal around 56 gigabytes, 450 gigabytes worth of data from AMD servers. That's kind of weird. The attack was initiated on the 5th of January, 2022. It's not confirmed if the value of the data, is gigabytes or gigabits, because lowercase b bits was used correctly. The Ransom House leak, there we go. As far as, I guess there is some more posts. Currently, there's no proof if the data was actually stolen from AMD or if the company was the primary infiltration target or a different portal that might be an AMD partner. Restore Privacy reports that most of the data includes network files, system information, and AMD passwords. The Ransom House Telegram group has already posted this announcement as discovered by Restore Privacy. Also, Ransom House doesn't consider itself a ransomware group and has issued the following statement. We have nothing to do with any breaches and don't produce or use any ransomware. Our primary goal is to minimize the damage that might be sustained by related parties. Ransom House members prefer common sense, good conflict management, and intelligent negotiations in an effort to achieve fulfillment of each party's obligations instead of having non-constructive arguments. These are necessary and sufficient principles that lead to amicable agreements and sometimes even to subsequent productive and friendly cooperation. That is pretty funny. AMD has yet to provide a statement, but we should remember that NVIDIA was also hit by a similar cyber attack earlier this year, which was said to be counterattacked, but hackers still managed to get their hands on a vast amount of confidential documents regarding NVIDIA's hardware and software efforts and leaked it to the public. The source code of DLSS and next-gen GPU code names and specifications were on the list of the data that was leaked. Gigabyte was also hit by a major attack with several confidential files of Intel and AMD products being leaked out, including specs for Zen 4 powered Ryzen and EPYC CPUs. We have to wait and see if AMD will confirm or deny this hacking attempt. There you go. So more hacks going on all the time. It is what it is. You got to stay vigilant, especially with those large companies. Kind of interesting that they didn't do a ransomware attack where they lock the files to get paid out. It sounds like they're trying to be like some sort of white hat to a certain extent, which is hilarious to me in general, because why would you leak it publicly? Of course, being that it happened back in January, maybe they have been trying to resolve it behind closed doors, and now they're trying to get money out of it and making it public. Who knows? As far as passwords getting leaked, those aren't usually too big of a deal because you're just going to have your entire company reset their passwords. So that being released to the public is probably a moot point at this time because there won't be any of those active anymore. So if you guys have been mining Toncoin, it's over. I'm sorry. There are rumors, of course, of Toncoin moving to some other sort of distribution method that allows for you to continue to mine. I don't have all the reports on that yet, but as of right now, final Toncoin mined ahead of transition to proof of stake. To be clear, they've always been proof of stake. To understand that, and maybe this article will cover it, all the mining was used for was distribution. Essentially what happened is that they took a bunch of Toncoin and put it into smart contracts, and then in return for mining it, they distribute it to miners. It didn't provide security to the network like a typical transition from proof of work to proof of stake. All it did was enable a way to fairly distribute the coin without doing something like an airdrop, which is highly looked down upon, especially since the last bull run, so the 2016 to 2018 bull run, that was kind of a big thing, right? Airdrops, ICOs, all that sort of stuff. It was looked down upon. So Toncoin, what they did with their distribution was basically distribute it through some sort of mining process, for lack of a better term, through smart contracts that locked up some of the coin. And if you threw, a GPU at it to solve some puzzles, it paid you out, but it wasn't really minting any new coin to be frank. So from now on, new Toncoins will only enter circulation by proof of stake validation, resulting in a decrease of new Ton entering the network by about 75% to 200,000 daily. The final Ton was mined in early hours of June 28th, signaling Toncoin's transition from a largely proof of work model to proof of stake. Once again, not really proof of work, not true proof of work, just a smart contract that allowed you to solve some puzzles to get distribution of Toncoin. All right, let's make that clear. All that coin was already generated. It's not like it was generated out of thin air, to be frank, right? So that just needs to be, it's kind of weird. I understand that we use proof of work as the idea of solving puzzles with, GPUs to solve blocks, but no blocks are being solved, right? So that's an important distinction. From now on, new TON coins will only enter circulation by proof of stake validation, resulting in a roughly 75% decrease in new TON entering the network to 200,000 daily. The TON blockchain already runs on proof of stake technology, but its initial token distribution was enabled by mining as opposed to coin offering that proof of stake tokens usually use. The mining element prevented just a few participants from accumulating a significant number of coins. Hence why I think it's super valuable, by the way. I think this is probably, and this is something that I think we'll see more of, right? So when we talk about GPU mining dying, right? That's probably not going to happen. I think for fair distribution, and also there's an argument for early on security, that not in this particular case with TON coin, you do probably want to do some sort of proof of work setup and then move over to proof of stake later. Or, right, you have other new technologies like optical proof of work with Caspa, but for now you don't have access to that hardware. So in preparation to get the network up, you're allowing CPUs and GPUs to be mineable. There will be projects like this over and over again, I think, and it's just going to come down to, from the GPU mining perspective, staying on top of things, making sure you're aware of new projects that are launching that need this sort of thing. It's going to make it harder to liquidate. It's going to make it harder on your balance sheets, taxes, all that stuff is going to be a little bit more difficult, but this is how you survive, right? And I'm talking like a post-Ethereum merge world, right? In proof of work consensus mechanisms, anyone with the appropriate equipment can become a miner, creating an honest and even distribution of tokens amongst participants in a network, the TON Foundation said Tuesday. The TON Foundation, stewards of TON coin and its surrounding ecosystem, referred to this combination as an initial proof of work IPOW mechanism and claimed that it created a best of both worlds approach between proof of work and proof of stake. Except you're missing the big part, I think. Like, don't get me wrong, this is probably the best way to distribute, right, your tokens, I think, in general. However, it doesn't get the best of both worlds because you're lacking on the security front for the proof of work that proof of work offers, right? And the biggest thing, the most important thing with a proof of work network is that it typically is more secure than proof of stake, right? So it kind of missed that. It's not the best of both worlds because you would really want the security from proof of work. Just in my humble opinion, proof of work mechanism used by the Bitcoin network has the drawbacks of being energy intensive and slow, making it expensive and needing a lot of time for transactions to be validated. Ether, the world's second largest cryptocurrency, is migrating to a proof of stake model. The transition marks the continuation of the TON Foundation's development of the blockchain project, which messaging app Telegram abandoned in 2020 following a lawsuit from the U.S. Securities and Exchange Commission. This is another important thing that I thought was interesting, right? TON coin was developed by Telegram, or the founders of Telegram, and then it kind of went away, and then the community picked it back up for development. Why is that important? What is this a demonstration of, right? Because we're talking about the U.S. Securities and Exchange Commission coming in, basically trying to shut down a blockchain, and then the community coming back and saying no, and rebranding it and building it back up. Once again, I'll go back to what I talk about all the time, where people are always scared of regulation surrounding crypto and so on. And to a certain extent, it's impossible to regulate and snuff out all of the cryptocurrencies that are available. Communities will develop around all of these digital assets and build them up and keep them running. And I think this will become more and more common. And I do think this is part of what I refer to as the digital transformation, right? And the biggest piece of that is going to be cryptocurrency over the next, few decades. Members of the TON community, however, formed the TON Foundation and continued to develop the blockchain, rebranding the project TON coin from the original TON. While the reincarnated TON is not affiliated with Telegram, it does have the messaging app's endorsement. In April, crypto payments in TON were added to Telegram using the app's @WalletBot. So there you go. Still kind of working, with Telegram to a certain extent, but it's not a Telegram security. That's kind of the bounce around. Kind of fun, right? Once again, I'll go with that quote of like, call a spade, but don't take my spade away. And the fact is, I don't think you can take my spade away. I just don't think you can. I think it's super difficult to do so. We have a really interesting post covering, obviously in the bear market, Bitcoin mining is extremely low margins, right? We're talking about $10,000 machines. Now they're coming down to like $6,000, $5,000, sure. But we're talking about the purchase time in January and so on. A lot of these machines, these ASIC machines that are powering Bitcoin mining, were costing $10,000 to $11,000 that are only making maybe $3 to $5 a day. If you're really, really savvy, $5 a day because you've put on, the new firmware from HiveOS or something along those lines, bumped yourself up. However, even then, those margins are extremely low. It's causing a lot of large Bitcoin mining firms to find other ways for funding because capital is low, sell some of their Bitcoin to cover costs, etc. And there's a great analysis here from Jaron Mellerud, there we go, on Twitter covering basically which company is handling it the best. And I found this extremely informative, so I wanted to share it with you guys. It says, which public Bitcoin miners will be the winners and losers of the bear market? He says he analyzed their cash flow and balance sheets to find out. So the direct Bitcoin production cost impacts a miner's operating cash flow and determines when a miner is forced to turn off machines. Stronghold and Argo have the lowest direct Bitcoin production costs, while Bitfarms and Hut 8 have the highest. So Hut 8 has the highest, which is interesting as well. And you can see that here too. So he has charts. This is awesome. Like, frankly, this is amazing stuff. This is everything we need to start analyzing it. I'd like to do a dedicated video on this, but in black, you have the Bitcoin direct production cost and then the cash flow. Always remember, in this type of realm, cash flow is king. So the better, over here, Stronghold, Argo, you keep going up, Hut 8, higher Bitcoin production costs, lower cash flow. Higher Bitcoin production costs, lower cash flow on Bitfarms. That's kind of the point of the chart. Cash is king in the bear market. We talked about this before too. Some of the regrets that I had, not being, cash solvent, not moving a lot of my Bitcoin out when I knew I should have, right? I fell into the trap of hopium and bull runs and wasn't really paying attention as well to the halving cycle as I typically do. It always feels easier, hindsight 2020, but I kick myself because hindsight 2020, it's very clear what was going to happen. That being said, the miners with the most substantial operating cash flows are best positioned to pay upcoming expenses such as machine deliveries or debt payments. Core Scientific has the highest current operating cash flows. So you can pop into here, you can see cost of revenue and operating cash flow. So you also have this kind of factor going on. And you see Core Scientific, yes, their cost of revenue is 16.3, but they have an operating cash flow of 16.6 million. That can help a lot. The cash outflows are also important. Some of these companies have hundreds of millions in remaining machine payments in 2022. Marathon has the most with 260 million. So your machine orders versus your machine financing. This chart shows the remaining machine payments in 2022 relative to the current operating cash flows. Marathon has 6.2 times higher remaining machine payments in 2022 than their accumulated current operating cash flow accumulated out this year. This will drain them of liquidity, so this is bad. The lower the number, the better. Argo down here, Core down here, but then you got Marathon just blowing everything out of the water. Let's move away from cash flows and look at balance sheets. Marathon may have horrible cash flows, but at least they have very strong balance sheets with lots of cash and little short-term debt. So there you go, as far as that goes. CleanSpark has the least debt relative to equity. with a DE ratio of 0.1. Stronghold has the most debt with a DE ratio of 4.7, which is exceptionally high for a Bitcoin mining company. Most of these companies are struggling, and some will get into liquidity squeeze that will force them to liquidate parts of their assets. In the midst of every crisis lies great opportunity, as the best capitalized miners can buy struggling miners' assets cheaply. I believe that Argo blockchain is currently the Bitcoin miner that is in the best financial condition. Argo has a strong balance sheet with little debt and strong operating cash flows relative to upcoming machine payments. Argo also has the second lowest direct Bitcoin production costs. The weakest miner based on this analysis is Marathon. Marathon has a strong balance sheet with loads of cash, but their massive upcoming machine payments will drain their liquidity. I believe they will be forced to liquidate most of their Bitcoin or sell their machine orders, which is not what you want to be doing in a bear market. As a miner in a bear market, you want to be able to cover your costs and stack as much crypto as possible in preparation for the next bull run. So obviously, you should definitely check out this link down in the description, share it out with your friends and family, all that sort of thing, kind of give them the idea of why it's functioning that way. Now, Ethereum has its Glacier update coming. For us GPU miners, this is important because what it means is that we'll have a decrease of difficulty on the network. For the users of Ethereum, this will be better because we will see a decrease of the average block time. Currently, the average block time is over 16 seconds, so it's at 16.27 right now. And this will go into place at 15,050,000. So we have about 10,000 blocks left. I did the math out earlier, but of course this fluctuates. It means that we should see the Glacier upgrade happen sometime within the next 45 hours. So in the next 2 days, right? Which Wednesday obviously is tomorrow, which we were expecting it to be. Looks like it's going to be pushed out. The upgrade won't actually happen based on block times and the current block that we are on, and for up to 2 days, right? So we're not going to see it necessarily exactly tomorrow. It's probably going to happen somewhere like on Thursday. That could change, but I don't necessarily see block time speeding up that quickly right now. Like I said, that could change. It just is what it is. Another note is that right now we actually have some gas limits going up, so prices could be good there too. I don't know if people are preparing or what for the block upgrade, but that's the update. We got about somewhere around 45 hours left before it goes through. We'll keep you guys updated and see if that gets accelerated tomorrow. Now, we've been talking a lot about Anetta and AnettaBTC on this channel because it is what I'm mining and it is what's kept the mining farm at least in the green to a certain extent here. But let's talk about the yield of dreams and kind of how they function, because this is a question that I've had, and they did put a nice blog post out here for us on Medium to go ahead and get caught up. The idea of Netta is to essentially have a wrapped Bitcoin on Cardano and Ergo. Now, Cardano is obviously a proof of stake. It uses the Ouroboros proof of stake consensus mechanism. And then, of course, we have Ergo, which is traditional proof of work mechanism. They are kind of working together, sort of. The communities cross over primarily because the creator of Ergo worked with Charles Hoskinson, and that is kind of where it sits. I believe, as far as I'm aware, also there is the potential of the Sigma protocols for the stablecoin being moved over to Cardano as well, or being utilized by Cardano. So that is kind of why Anetta is on both networks, to be clear. Anetta is also utilizing essentially smart pools on GetBlock to generate essentially generate some more Ergo to purchase Bitcoin to have the backing for the wrapped Bitcoin. That's at the end of the day exactly what they're doing. So they say, welcome to AnettaBTC's Yield of Dreams. In this article, we discuss the benefits that come along with AnettaBTC's platform tokens, Netta and CNetta. The rest of the article will explore what to expect and how to get involved with our community. So they say over the past few months, the AnettaBTC team has implemented various ways to earn and use Netta and CNetta, the platform tokens of AnettaBTC. In this article, we break down how to acquire Netta and CNetta, and we explore the utility that comes along with token ownership. And this is a big question because obviously what they're doing on the mining side is that they're taking the Ergo and paying you out in Netta, but Netta doesn't really necessarily have any value backing it, right? What it has sort of is just a governance token from what I understood at the beginning. There's nothing really that sets it apart. Like at the end of the day, what is backing the Bitcoin from our mining perspective is Ergo that we're giving them, and they're paying us Netta token in return. And they're taking that Ergo and investing that into Bitcoin, and then going to use that obviously to back the wrapped Bitcoin. But AnettaBTC is on a fully on-chain decentralized protocol that allows Bitcoin to be directly wrapped on the Ergo and Cardano blockchains. It is similar to wrapped Bitcoin, WBTC, which currently has a market cap of 5.6 billion. The main differences between wrapped Bitcoin and AnettaBTC are as follows. AnettaBTC is a decentralized solution, whereas WBTC is entirely centralized. Furthermore, AnettaBTC lives on Cardano and Ergo, where wrapped Bitcoin exists on Ethereum. As AnettaBTC operates on both Ergo and Cardano networks, there are two governance tokens, Netta and CNetta. The functionality of Ergo native Netta and Cardano native CNetta tokens is identical. Overall, holding Netta and CNetta comes with a variety of benefits, they say, including 100% governance of the AnettaBTC protocol, 100% revenue sharing of protocol transaction fees, and 100% ownership of the Netta liquidity fund, ability to claim eTOSI and cTOSI, and other project tokens in the future. We have previously announced that holders of Netta and CNetta will be able to claim MIN and ErgoDex platforms tokens through distributions from the Netta liquidity fund. In the future, the community will be able to vote on the usage of the liquidity fund, which is currently holding 8+ assets and is generating on average over 50% APR through various DeFi protocols such as Miniswap and ErgoDex. CNetta and Netta holders will have the ability to vote on the direction of the fund when governance is fully operational. So that's the point in having the Netta, which is currently being developed and ready for implementation soon. Growth of the Netta liquidity fund comes from Netta 1 and Netta 2 stake pool rewards. ERG mined with the AnettaBTC smart pool, liquidity pool rewards, yield farming rewards, and 100% of the royalties on all Anetta Angels NFTs secondary sales. At present, there are multiple ways to acquire Netta and CNetta, including but not limited to staking Cardano with Netta 1 and or Netta 2 stake pools on Cardano, mining with the AnettaBTC smart pool on Ergo, which is GetBlock, which we have a guide for on the channel, holding the Anetta Angels NFT on Ergo will earn you Netta as well, and acquiring on a decentralized exchange such as Miniswap or ErgoDex, CNetta and Netta. Once Netta and CNetta is acquired, holders can use their tokens in several ways, including providing liquidity and yield farming on decentralized exchanges, staking Netta and CNetta with AnettaBTC, governance. So here's how their governance works, which I'm curious on. With our governance mechanism, each Netta and CNetta will recount as one vote. We are expecting the governance vote will be in regard to the community fund, where holders of Netta and CNetta will be able to vote on aspects of the fund as which tokens should be acquired in the future. When the wrapping protocol is live, holders of Netta and CNetta will be able to vote on topics such as what service fee should be for minting or redeeming Bitcoin. And then 4, holding Netta and CNetta for access to current and future project tokens. Kind of goes into, of course, that drop of TOSI drop that we talked about before. So final remarks are in this article. They discuss the different ways to acquire Netta and CNetta, along with the current and future utility that comes with token ownership. And they say thanks to the community for the continued support as we continue to develop our protocol and prepare for a launch of our testnet in Q3. I do not know if they are increasing the 10 million tokens in the smart contract for GetBlock yet. I think there's only at this point, 3 weeks left, something like that, before it would inevitably run out. But they are talking about increasing that as well. So I'll keep you up to date as far as that goes. There's also supposed to be some news of another smart pool coming soon. We'll be talking about that as well when it launches. Luxor launches a hosting marketplace for Bitcoin miners amidst build-out delays. So a lot of what's happening in cryptocurrency mining in general, I'm experiencing it too, is there's just a lot coming in. Areas where Bitcoin mining is... how would I put it? Where Bitcoin mining is growing, right, are also experiencing massive growths outside of just Bitcoin as well, meaning that things like houses are being built, power companies are having to supply power to new houses, new businesses, as well as to cryptocurrency miners, which is delaying a lot of that. You also have a delay of the actual building of the cryptocurrency miners. It can put you in like weird positions where build out delays happen. The marketplace will offer hosting clients in the US and Canada, with miners able to have as little as one mining rig hosted by some providers. Luxor Technology, the full stack Bitcoin mining software and service provider, is launching a marketplace for miners where customers will be able to purchase hosting services for their mining rigs. Miners will be able to shop for hosting services when they buy Bitcoin mining computers through Luxor's brokerage service that was launched earlier this year. Luxor will essentially play the role of a broker, matching miners that need their machines plugged into a hosting provider. Luxor said that it has done over $100 million in trading through its mining rig brokerage service. Quote, Luxor's hosting marketplace enables miners to choose hosting providers that meet their unique operational and geographical requirements, end quote, Luxor Director of Business Development Aaron Foster said in a statement. Rather than a one-size-fits-all approach, Luxor aims to provide a white glove service that removes the uncertainty around hosting decisions, he added. In recent months, infrastructure and power supply related delays, as well as a lack of capital, have caused bottlenecks for miners in growing their operations, with more miners than places to plug them into. There have been widespread delays in infrastructure buildouts due to supply chain constraints, operational complexity, and power delays, Lauren Lin, Luxor's operations manager, told CoinDesk. These problems have led many investors, such as family offices, hedge funds, and high net worth individuals, to look at hosting options with established miners to get up and running. Hosting is the service that data centers provide to crypto miners, in which customers can store their ASICs and mine their preferred digital assets for a fee without having to build the accompanying infrastructure themselves. Bitcoin mining hosting can provide miners with the more favorable power rates than they can get at home, according to Luxor's statement. Luxor's hosting partners offer a range of rates and revenue profit sharing arrangements, as well as GPU and ASIC hosting, the statement added. The new marketplace will have hosting clients in the US and Canada, and miners will be able to have as little as one mining rig hosted by some providers, according to Luxor. Now, a word of warning with these hosting solutions, just to be clear, like we're seeing with ProDirect Mining, for example, I believe they've stopped now their hosting. And when we get into this bear market, a lot of the push comes to shove, and you end up in a position where you aren't guaranteed that these hosting facilities are going to continue to maintain the prices that they maintain and the services that they maintain. There's also, just as a fact, infrastructure challenges and repair challenges, a ton of different challenges when it comes to hosting that I don't think a lot of hosting facilities are prepared for, from 24/7 uptime to the fact that there is no redundancy in mining when you're talking about compared to traditional data centers. And it's a very new space. Also, from the perspective of Luxor in general, not to like dog on them a ton, because I don't like, obviously, like what they're doing is super awesome, like what they're trying to do, but always be like careful surrounding it. Like we've seen before, they've said things like they're in talks with Ethereum, and they're going to try to stop Ethereum from going proof of stake. They have very lofty goals, but the actual reality of the matter is they might not be able to do that, right? Like, I don't think they're going to convince Ethereum to go stay proof of work. And so when you have that kind of attitude in a company at the top level, like we've done the interview with them talking about it, it makes me think that like they have, like I said, very high, lofty goals, but they might not be able to follow through. And that's just being realistic. So be very careful with these types of services, especially because if they really, really go belly up and you got a miner sitting there, like what's the likelihood that if they go bankrupt, they're going to be able to ship your miner back to you, right? It just makes me nervous. A lot of the hosting stuff makes me nervous. The more I look into it, the more I look into it from my perspective, because I was looking at building out, once my facility is built out with, 800 amps and all that, I was like, well, I could do some hosting service, but what does that really require, right? Even if you just do ASICs, you still got to have some sort of like 24/7 support service to make sure you're staying up, answering customer emails, doing all of that. And the cost of that is pretty significant because you can't just have like some regular average Joe working for, a standard lower wage monitoring all the time. You need to have people that are familiar with like networking and all of that, right? And so the price of that goes up a lot. Harmony attacker moves over 44 million worth of stolen Ethereum. Authorities are alerted. Harmony is working with 2 blockchain tracing and analysis firms and collaborating with the FBI, developers say. The attacker behind last week's $100 million exploit on the Harmony network started moving funds worth millions of dollars in cryptocurrencies last night, blockchain data shows. Harmony is aware of the movement and is collaborating with blockchain analysis firms and the Federal Investigation Bureau to catch the culprit, developers said in a tweet on Tuesday morning. The exploited Horizon Bridge allowed users to exchange assets such as tokens, stablecoins, and non-fungible tokens between Ethereum, Binance Smart Chain, and Harmony blockchains. Blockchain data shows that the exploiter wallet, marked Horizon Bridge Exploiter, moved over 36,000 Ether worth over 44 million in the past 26 hours. On Monday, the exploiter moved over 18,000 Ether worth over 22 million at the time of writing to 3 wallets. The coins were then sent to Tornado Cash, with the 3 wallets holding only a few Ether at writing time. In Asian hours on Tuesday, the exploiter moved another 18,000 Ethereum to yet another wallet. From that, some 6,000 Ether was then moved to a separate wallet. The funds were then sent to privacy swap service Tornado Cash in batches of 100 Ether each. Over 1,200 Ether worth just over 1.4 million passed through Tornado Cash at press time. Tornado Cash breaks the on-chain link between a source and a destination address. This allows exploiters and hackers to mask their addresses while withdrawing illicitly gained funds. The main exploiter wallet continues to hold over 49,000 Ether or over $59 million as of early European hours on Tuesday. Meanwhile, the price of Harmony's native 1 token slumped nearly 9% to 2 cents in the past 24 hours. These are always interesting because the blame likes to go on to the exploiter or the hacker, right? But is this really their fault, or are they exploiting something that was built too fast and lazily with Harmony? And should that be the actual point of contention, right? Should you be looking at that technology? Should you be looking at Harmony and saying, hey, what are you guys doing that's allowing for these exploits? Should you take things slower, right? Should you be basically reviewing your code, reviewing your services, and making sure that you don't have these exploits, available to attackers? And I think that that is something from like an OPSEC point of view that is going to be very, very highly sought after within cryptocurrency as we keep moving forward. And this stuff is, like I said, common par for the course when we're talking about the traditional halving cycle. And when you hit a bear market like this, more hacks start coming into play, more exploits and all of that. The lazy developers, the lazy projects will get called out and they will fail. And so you end up in a position as an investor to where you need to pay attention to what's happening so that you're investing in solid projects. Speaking of that too, Solana's biggest DeFi lender almost got wrecked. Then Binance stepped in. This is important because what is happening here, like we talked about before, is Solana kind of paused essentially the largest wallet on the network, which was a whale, to manipulate the network and keep it up and running. And now they're basically getting a bailout from Binance. This should have spelled disaster for Solana at the end of the day. And it's not because they fixed the problem that it's not happening. It's because they're getting a bailout, right? Solana's whale crisis rattled depositors and threatened to crash Solana. Can lending protocol recover? What happens? Excuse me. Let me get a drink of water here. Hold on. There's a lot of reading going on. You know what? Know what I mean? All right. What happens when there is a multi-million-dollar margin call and no one picks up the phone? The eerie prospect threatened to become a nightmarish reality last week for Solana's second biggest decentralized finance outpost. Its single largest user, a wallet with 107 million in USDC, borrowed against 170 million in Sol collateral, was on the verge of liquidation and completely missing in action. Developers tried Reddit posts, on-chain messages, even Twitter memes, hoping to alert the anonymous account of its impending fate. The whale account needed to either pony up more collateral or reduce its position to ward off catastrophic on-chain liquidation that project lead says could crash Solana and maybe even Solana. At the end of the day, yeah, probably crash Solana. The frantic rush to save Solana exploded into a governance and power controversy that elicited accusations of DeFi hypocrisy on crypto Twitter and beyond. Ultimately, it was CeFi giant Binance who woke the whale. Solana's pseudonymous co-founder Reuter told CoinDesk. The world's largest crypto exchange delivered a message to the account on Reuter's behalf, saying, quote, "I'm sorry that this issue has caused concern in the Solana community and with the Solana team," end quote. The user emailed Reuter on June 21st, according to screenshots shared with CoinDesk. There's no hard feelings about the recent governance proposal. After established contact, the whale began redistributing its Solana bets into other Solana DeFi outposts like Mango Markets, ending the most acute crisis without a single cascading liquidation. The price of Solana has recovered enough to quiet all the chaos despite the heavy dose of momentary issues. Solana's liquidation debacle came, excuse me guys, hold on a sec. So one of the points that I wanted to bring up that I find extremely interesting is that this user seems to be tied into basically primarily focused on Binance for his trades and so on. So he wasn't even aware that this was going on from the DeFi perspective. So, okay. Solana's liquidation debacle came as turbulent crypto markets rattled DeFi protocols of all stripes, pushing decentralized governing bodies to make tough decisions that affect protocol users in lasting ways. I'm having trouble, guys. I got stuff in my throat. That can make for a messy cocktail in decentralized finance, programmatic smart contract code, devoid of human biases that might, say, prompt a banker to refuse a loan to a minority group is meant to be the immutable law of the land. Of course, reality is more complicated. Solana's crisis emerged because its protocol had set no limits on how big a borrower could be. The result, a single whale accounted for the vast majority of Solana's Sol collateral in USDC loans. That collateral was at risk of liquidation if the price of Sol fell too low. Solana's smart contracts automatically send liquidation sell orders to DEXs when the user collateral falls too low. They're pure programmatic. They don't holistically check to see if a trade will crash the markets or worse, the chain. While billions of dollars in Solana traded hands every day, most of that action happens on centralized exchanges, not over the much more thinly traded DEXs where DeFi cousin Solana routes its trades. DEXs don't have enough liquidity to soak up the whale's dump, meaning Sol's price would crash perhaps 60 or 80% until buyers arbitraged it back up. That itself was a problem, Reuter said. Quote, it's such a crazy art arbitrage opportunity and liquidation opportunity that bots would just flock. That type of activity has crashed the entire Solana blockchain in the past. Solend was sure to take the brunt of the pain. It would be left with bad debt, a depleted treasury, and disenchanted user base. It's basically over for us, and our users will lose a ton of money, Reuter said, explaining that would happen if the smart contracts did what they were designed to do. We really have to do something now, he said, recalling the outreach effort. Bankers in traditional finance can address a comparable snafu with a margin call to clients whereby they lay out the stakes and explain the need for more collateral to secure a loan. After all, they know their counterparties' identities. The borrow is a phone call or email away. That's not the case with pseudonymous DeFi, though a handful of startups are working on interwallet messaging solutions, none of which Solana used. Unable to broadcast their message privately, Reuter took the plea for the whale's attention public on Twitter. This spooked users into pulling their money from Solana en masse, emptying the vaults much as would happen in a bank run. Reuter admits the tweets backfired. It kind of exacerbated our problems because then not only were we dealing with a risk that something might happen, but we were dealing with an immediate problem that people's funds were frozen. Their solution was a controversial proposal to grant Solana Labs emergency powers over the whale's collateral. Once in control, the caretaker company would gracefully liquidate the whale via off-chain over-the-counter trading desks and, in effect, sidestep the market 0 day. It would turn the USDC back over to the whale, resolve the crisis, and right the markets. That said, it would overrule the smart contracts designed to be in control, and that's where optics became painful. Many DeFi protocols put code changes up to the community. Their token holders get to vote on new listings, rate hikes, partnerships, that sort of thing. The bigger the user's token trove, the weightier its opinion. It's an imperfect system for managing perpetually decentralized systems, albeit a popular one. Solend hadn't ever held a DAO vote before, but Reuter said it needed to put the controversial solution before the community. On June 19th, it proposed SLND1, the Emergency Powers Package. 6 hours later, the vote passed by 97.5% with just enough participation to meet a 1% quorum. Beneath Solana 1's apparent landslide was a less savory picture. A single wallet with 1.01% of the turnout tokens, a ballot whale if you will, made the difference. Without its participation, SLND1 would have failed to reach quorum and flopped on the technical. It only passed in the affirmative because it voted in the affirmative. Reuter said Solan's team asked the ballot whale to vote after fretting over Solana 1 low turnout. He said they did not ask the whale, who is active on Discord, to vote yes or no, only that they participate. The ballot whale obliged. Quote, users of the protocol have generally been very supportive, and then the critics tend to be like people on Twitter who have no stake or no deposits, Reuter said. This is true every single time, though. And that's because the people that are on the outside are saying, hold on, you guys are messing with stuff that you're not supposed to mess with. You're going against the principles. You're going against the code, the law, and we see it. And we're going to call it out. That's not necessarily like, obviously, like if people are investing, they're not going to want it to go down. So, of course, they're going to vote to save it. I think that MCT oil and that coffee got to me, guys. Ugh. The whale again basically swayed the whole vote, Reuter said. After a lot of hemming and hawing, the whale didn't want to act just to appease crypto Twitter's armchair experts, Reuter said. As well as tech hiccups, the ballot whale voted yes with 14 seconds to spare. A final June 21 vote on SLND3 saw the community approve what is effectively a new borrower ceiling at 50 million. This was too designed to mitigate whale risk. It also passed with the ballot whale's critical yes vote. And this is fine. I think this one's perfectly fine. But anyways, you should have that in place beforehand, right? By this point, Reuter's parallel outreach effort had finally yielded fruit. Binance had gotten the borrower whale's attention, and they were in contact via email. Over the next couple days, the situation was slowly resolved. Binance declined to comment on the Solana situation. A spokesperson at the exchange confirmed it has been an intermediary between project teams and account holders in the past. The spokesperson said Binance never shares information without its users' permission. I would hope not. There's plenty of reputational damage. Observers from Solana's VC community told Coindesk they feared Solana had suffered an insurmountable setback with its series of governance votes. It is inertia versus terrible governance decision, said one researcher on Monday. He wasn't sure which force would win. Solana's total value locked, TVL, has dropped to 10% over the last week and nearly 60% in a month, while second-tier Solana DeFi lenders such as Larix, Hubble, and Oxygen have fared far better. Mango Markets has gotten the lion's share of the whale redistribution. Speaking to CoinDesk last Friday, Reuter struck a hopeful tone. By then, Solana had steered through the crisis without suffering a catastrophic liquidation. I think this sentiment is kind of improving. I mean, the PR blowback has also blown over at this point. Solana lost a bunch of TVL, but you know, people can use it now, Reuter said. So Solana remains the second biggest DeFi project on Solana. Solana just keeps having issues over and over again. And it all seems to be related to like lack of preparation and lack of due diligence. And like, I mean, I get it. You can't really necessarily blame Solana for Solana, which is a separate DeFi project. This is just the nature of cryptocurrency, to be like completely frank. But it's the type of people that are working within these projects that when you start to like question exactly what's going on and I always have this issue with like, if you have like extremely intelligent people building out these services, why are things like, I don't know, a borrower ceiling not thought about ahead of time? Like, oh, maybe that would be a good idea. Maybe we should go ahead and do something with that, right? We're going to get into mining profitability for the day on my farm, but right after a word from our sponsor, so stay tuned. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back, everybody. So, mining profitability. I actually only have 13 workers online right now. I have a lot of rigs offline. We're doing 10.72 gigahash a second. Like I said, I'm kind of working through a lot of stuff over there. So, this isn't necessarily my full farm. Or it's anything but. It's five, 6 rigs offline right now. But we're still doing okay. Let's go ahead and calculate this out though to give us an idea. So we have done 10,363 netta plus the 6,234 netta. So we've done 16,597 netta. If we go into the DEX, we can get an idea of what that comes out to. 597. It comes out to about $92 for yesterday. With 5 rigs offline, that's pretty good. You know, if we had the equivalent on Ethereum right now, let's try to calculate that out. It would be about 4 giga. Would that even be 4 gigahash? 4 gigahash at best, really. Calculate that out. We do $58 on Ethereum. So we're definitely doing better on Netta as far as all of that's concerned. I'm still adding liquidity and all of that. And then we'll reevaluate with the Gray Glacier when it comes to fruition, probably within the next 45 hours or 48 hours. We're just going to say 48 hours. Within the next 2 days, we'll have a reset of the difficulty bomb and we'll reevaluate from there. So taking a look at what to mine and calculating that out, a 3090 with the corrected hash rates on ZIL Hash, Kapow, ProgPow, and Firo proof of work. Ethereum is back in the lead at $1.76 a day in revenue and 99 cents a day after power. Ravencoin $1.75 a day in revenue and 96 cents a day after power. Xano $1.72 a day in revenue and 92 cents a day after power. Cero $1.61 a day in revenue and 82 cents a day after power. Conflux $1.60 a day in revenue and 81 cents a day after power. If we scroll down, we got Autolicos actually beating out mining directly right now. Ergo Direct is $1.27 a day after power, 65 cents a day, or sorry, $1.27 a day in revenue, 65 cents a day after power. But on NiceHash, it's $1.53 a day in revenue and 91 cents a day after power. And that's a pretty interesting turn of events. We always see that with like Flux and ZIL Hash, where like if we mine Flux directly, it's $1.32 a day in revenue and 63 cents a day after power. On ZIL Hash, on NiceHash is $1.49 a day in revenue and 80 cents a day after power. So really, this is really good news for the market. That actually makes it, this is, I bet you people are renting out and stacking Netta. That is probably what's happening. It makes it more profitable on NiceHash than almost, I mean, everything except for Xano, Ravencoin, and Ethereum. Puts it in fourth place. It's interesting. Firo is down to 70 cents a day after revenue. And that pretty much covers it up. This is the first time this has happened. That's why I say it's extremely interesting. And the margins are pretty good, right? We're in what, 93%? Yeah. That's pretty good. It's interesting though. Yeah, NiceHash would probably be using, I mean, you can use the smart pool. All you gotta do is target it and then change it in the settings page. I don't know how you get the public IP of the miner though. That's a fair point. I'd have to ask if that's actually even possible, because you have to do the settings changes, right? All right, so Ethereum's down to 941 terahash a second. Let's go ahead and look at Bitcoin, see what's going on there. We're at 221 exahash a second, no real changes. Ethereum Classic, what are we at? We are at 24.19 terahash a second. It had a little bit of a dip yesterday. I'm really curious what's going on with Ergo, right? So we're seeing this NiceHash spike stuff. What is happening here, right? So we're getting, you can see these spikes coming in and out. That would more than likely make me think Ergo. NiceHash. We're seeing some spikes on Solo Pool right now. See it right here. So it does look like solo mining is what's happening. We're seeing spikes on 2Miner Solo and solopool.org. GetBlock is very consistent right now. So they're not renting to get the Netta. They're renting for Solo. And the K1 pool Solo down here. But somebody on NiceHash, a trader, is interested in Ergo right now. So that is good news. That's good news that we have outside interest happening on Ergo right now. Obviously, it's been good news that we've had that interest on Flux as well. That was primarily from the nodes. I don't know what it is for Ergo right now. Two miners Ravencoin is at 3.24 terahash a second, with 2Miner Solo really getting a recent bump going on there. So some people are finding profitability there. That's good news. And let's take a look at Flux. Probably a similar situation to, well, Flux is at 1.46 mega solutions a second. Not really any spikes. Some spikes on Z Pool, Zerg Pool, probably Solo Zerg Pool. Couple spikes earlier in the week on 2Miner Solo and solopool.org. Mining pool profitability, last 90 days, Crazy Pool in first, Ethermine in second, F2 Pool in third. Last 60 days, Ethermine in first, ZET in second, Crazy Pool in third. Last 30 days, ZET in first, Crazy Pool in second, Ethermine in third. Last 21 days, ZET in first, Crazy Pool in second, Ethermine in third. Last 14 days, ZET in first, Crazy Pool in second, Crux Pool in third. Last 7 days, Crazy Pool in first, Mining Pool Hub in second, ZET in third. Last 3 days, Mining Pool Hub in first, Crux Pool in second, F2 Pool in third. And for the last day, Mining Pool Hub in first, Ethermine in second, F2 Pool in third. And then miner stat, which I thought I had pulled up, but we did not, so let's get that up. ASIC miner profitability. I think the L7's been the most profitable recently, still is at 20 bucks. KD6 is up a little bit, up to 1972, which means the KD5 is up to 1241. And if we scroll down to the S19 Pro, $3.62 a day. Make sure you're flashing that firmware, though, if you are running those and getting the up to basically $5 a day if you do that. So that's important to note as well. Let's get into questions and answers for the day. Remember, super chats are never required, always appreciated. First to be read because they're the easiest to be read. And then tagging at Son of a Tech will turn the message orange, and I'll be able to read it easier. I want to thank everybody that stuck around and supports the channel. You can find more content on sonofatech.locals.com, and I appreciate the direct support over there. You can now also gift memberships on YouTube that I've been made aware of. I do not know exactly how to do it, but I think it's either under the, I don't know. Anyways, let me know if you guys figure out how to do that. I know that we just enabled it, but it seems kind of interesting. I guess it's kind of like how you can gift subs on Twitch. I don't know where that's going to head or if they're even going to keep that around for much longer. But it is something that is interesting. So let's go ahead and get into this. Bam. And all right. So Dan says, Ask Son of a Tech, I greatly appreciate when you stop to explain things throughout your videos. It helps us noobs. Your work is valued and appreciated by the community. Thank you, Dan. Chadwick says, Ask Son of a Tech, running a customer-faced business for Bitcoin mining is challenging. That's all you'll do with your free time. Yep. Real Regos says, Ask Son of a Tech, are you keeping some of your Netta? I basically have it split 50-50 and added the liquidity pools. Dave Jack says, it's chia seed. Yeah. NZ at Son of a Tech, you're still mining Netta. Yes, I am mining Netta. We just talked about the distribution of that. So basically 50% of the Netta is converted back to Ergo, and then it's added to a liquidity pool. Forever Metalhead says, Ask Son of a Tech, MCT oil in coffee, especially warm, is a no-go. Yeah, I gotta not do that. That made this stream extremely difficult. Patrick says, Ask Son of a Tech, if I did not know better, I'd say your show. I'd say you time your show to just be just after Crowder. No, I timed my show like literally. Okay, so I timed my show literally based off of my work habits when I was working in IT, which was essentially get into work, get my tasks lined out for the day, answer the initial emails, then pop up a YouTube video or show on my second monitor to listen to while I got to work on whatever PowerShell script I was working on or whatever, right? So that was typically it. Like I'd have like something up on the second monitor, and I was like, you know, my target audience is probably going to be a bunch of IT guys, and they may be getting into work and getting right around that time to where they just need something up in the background to listen to while they're getting their work done. And that's kind of how I based it around that. Kirby the Kirby says, Ask Simon Tech, would be solo mining Ergo with your hash rate. I have about half of what you got, and you hit an Ergo block every 20 to 30 hours would be more than Netta mining. Whenever I've mined Ergo solo, I had never find anything. Like the last time I did it for like 3 days straight with like 13 gigahash and didn't hit shit. So I'm not going to play that risk game right now. Rad CPU man says, Ask Simon Tech, I believe adding the unconfirmed balance to your total Netta to calculate 24-hour revenue is counting the unconfirmed twice. Okay, I'll check that. We'll look at 24-hour payouts. I do wish they had an easier, because I don't think we have, because they only show, okay, so they only show like weekly, right? Weekly, monthly, all time. Oh, I'm stupid. So we can go into here. So we can go into payments, and then we can add up. So it wouldn't be for the 28th. It would be for the 27th. This is kind of hard. Let's see. Can we do earnings? Yeah, we can do earnings. Okay, so earnings would have been, so I think you're correct. But this doesn't seem correct either, because 6,000, but even payments for the last 24 hours is 10,000. All right. I'm going to talk to Rob and ask him what's the best way for us to figure this out, okay? That's what I'm going to do. Because I believe you could be correct, or are probably correct, and we will calculate that out and then get it going there. Weekly, we have the 71,000. Would that be easier to, and then we could go by weekly? Should be 400, then divided by 7. But then is that accurate too? Does that have a rolling? Anyways, all right. We'll go into it and we'll figure it out. All right. Thanks for calling that out. All right. So let's get into more questions and answers. Rock Guy says, Ask Simon Tech, any tips before one dives into solo mining? Make sure you have a really good ping to the solo pool, or build your own node. Probably build your own node. Wes says, Ask Simon Tech, similar to my IT work, I get in at 8 a.m., work hard for 45 minutes to an hour, knock out most of all my tasks for the day, then chill the rest of the day. Footlicker says, Ask Simon Tech, you still mining Caspa? Not currently. I'm trying to go get a rig up today, though. At Simon Tech, what will happen with the token like SHIB on the ETH network when ETH IP will be on? I don't know what the question is. I'm sorry. Unique Shady says, at Simon Tech, I got to say, dude, Saturday and Sunday are hard to get by without the Crypto Morning Show. Thank you for what you do. Thanks for watching, man. Been here since episode 1. Ooh, hell yeah. Queen of Random says, at Simon Tech, I switched to Netta after watching your vids, way better than ETH, but it must be a lot more than the 22% extra Netta conversion somehow. Do you know why it is so much better than what to mine? Here's what's, okay, so there is something that happened here recently where the price of Netta dropped. So like all the blocks yesterday were ending up paying out a lot of Netta, and then the price of Netta recovered. So you ended up like, we just had a couple really good days. And that is because when it goes into the smart contract, it's going to the DEX and pulling the price of Netta and then paying out the 122%. So it was doing that yesterday, for example, when the price of Netta was low, and then it was paying out a ton of Netta. I haven't gotten a full response on exactly what was happening. I did talk to Rob. I messaged him and asked him to look at it. He was out of town. He said he's going to look at it for us and let me know. But I think yesterday, for example, yeah, it was something like we had like 16,000 Netta that was paid out to that wallet. Let me see if I can pull the wallet. I do wish there was an easier, let's see, we'll view on Explorer. Because this is all, yeah. I need to figure out how to explore this better. So I think yesterday we ended up with like something insane. All right. I have to go back and look at the show again. NZ says, Ask Cybertech, what is your minimum threshold in Netta? What do you mean minimum threshold? A proxy server for Solo? No, you just build your own node. I mean, I guess you could do a, well, I don't know, you do a proxy. It depends on like what coin you're doing. I just build a full node. Like if I was going to solo mine Ergo again, I would build an Ergo node and then mine to the node directly to reduce latency. Right? But then you're still going to have latency to the entire network as well. So, there is like a, there is an argument for like not faster internet, but fiber internet to get more solo blocks. But then like there's the weird thing that happened where when I was solo mining Ethereum Classic, I was doing it on a hotspot and hitting more than I ever hit on my cable. So it's just, it's very weird. I can link you the Netta how-to video. It was done this week. I know we have a lot of videos because of the clips and stuff too. So it is what it is. We did how to mine Neox, so maybe it is older than that. I am trying to keep up with everything. Boom. All you gotta do is search how to mine Netta, and it's the first video, so there you go. All right. LZ says, maybe useful for the community. Collateral for pre-search nodes will soon be 4,000 instead of 2,000. As far as I understand, existing nodes can keep running with 2,000. Okay. Wes says, as son of a tech, I'm thinking about switching my farm over to Erg now and trying to solo just to see if you can hit a node. Hit a block? I mean, you could. Gandalf says, as son of a tech, have you bought any NFTs on the Ergo chain? Yeah, I have an Angel, and let's see, what NFTs do I have? I think I have 3. I have a Netta. I have a Cyber Citizen, and then I have for hitting a block, Get Block sent me a When Lambo NFT. So that was cool. Let me see if I can how would I show this? I think maybe Ergo AH. Let me see real quick. I think the Anetta Angel isn't on the Ergo auction house yet. I gotta set the wallet. Hold on, I'm looking if it'll show them all here or not. Otherwise, I'd have to show you in the actual wallet, and I don't think that works. It's loading. There it is, sorta. So I got this one. The Anetta one, because apparently I'll get Netta paid out for just owning it. And then this Cyber Citizen one, which I don't know why it's not loading here, but is what it is. So at least I got a cool get block win Lambo. Number 13 at 25. All right. Miller Mining Company says, "Ask Scientific, good morning from my IT desk in Oregon. Does Netta have more, or does Netta only move unconfirmed to payments once daily? Thanks for the show as always." No, once it's confirmed. So for a full rundown of that, check out my interview for like WTF is Netta Smart Pool, and Rob answers exactly how that confirmation process works, right? So it's a little bit more complicated. It takes longer because it has to go through the smart contract. But essentially you have to wait for that confirmation time, but it's based on that. It's not based on like a single day move. It's just based on the amount of confirmations that happen, right? Jacob says, "That's time to take. What happens to all the dApps like Aave and OpenSea when ETH goes proof of stake?" I mean, they'll all migrate over, just like they have to update whenever there's another fork. Village BC says, "Ask Simon Tech, do you run your farms at your home or offsite?" It's a separate site. 3 Mil says, "Ask Simon Tech, blind run, how long do you think this recession is going to hold for the US and for the world?" Okay, well, first of all, I'm not a financial advisor and I don't have too much experience with obviously like traditional financial systems and so on. What I can tell you from the halving cycle is that the recession is affecting crypto a lot less than you would, than a lot of people think. There seems to be this funny, unfortunate timing, or for those in the know, a very fortunate timing of the crypto markets dipping down with the rest of the markets, when in fact this dip in crypto is going to happen regardless. Just based off the halving cycle, right? Going back to 21K. We've talked about this before. So if anything, crypto's looking exactly like it should regardless of the recession, which is kind of funny. The rest of it obviously looking pretty bad. And it's going to come down to the fact that it depends on what you believe, right? So there are like concerted efforts that people talk about with, a reset of the global economy. And to a certain extent, I don't know that that's like orchestrated necessarily, but I do think it's part of the digital transformation that has to happen whether we want it to or not. Meaning, like, I think that crypto plays a role here as well. And I think that to a certain extent that this is just something that was going to happen regardless. And I think that we start to see basically more and more ubiquitous cryptocurrency use by the public as the financial systems begin to fail more and more often. And as they fail in the US, it's going to make it extremely more apparent that something else has to happen from a financial perspective for the regular person to be able to transact with each other without getting screwed by a bunch of people that decide to print a bunch of money and give it to themselves, therefore devaluing the currency that everybody else is currently earning, right? So there's all that. We could talk about lockdowns and that influence on the supply chain, reducing the supply and thereby driving prices up. We could talk about the pipelines, getting shut down and increasing the price of gas. There's a ton of factors that are going into it, and I know of them, but I couldn't really give you a when the recession ends. When does Bitcoin go back up? I could give you a reasonable explanation on that, which would be about 6 to 8 months post halving in 2024. And I think it will line up pretty good with the election. And an election is going to boost the economy regardless, because what happens is, at least in the US, which will obviously, the US dollar will affect everybody and it will affect cryptocurrency. What happens is, prior to the election and building up to the election, whoever is in charge tries to boost the economy to win the election. And so that can be done in a plethora of different ways, but that timing, along with, of course, the halving of Bitcoin, means that people will have additional money to spend and they'll dump it into cryptocurrency, just like we've seen before, right? So just like we saw in 2020, right? What we saw was the halving of Bitcoin, which bumped the price up a little bit due to, of course, the miners needing to sell at a higher price, which then caused, of course, a whole bunch of people to look at it and go, holy crap, look at it, it's going up. I'm going to go ahead and get in now, which then causes it to go up even further. And you get this euphoria kind of effect that happens every single time post-halving. That also aligned with the timing of the election, and also aligned with, to be frank, a lot of payments to people that didn't necessarily need them, right? So you had a whole bunch of people working from home that got paychecks from the government for doing absolutely nothing, which was additional income that they couldn't spend on anything because there were supply chain shortages. So what did they do? They dumped it into cryptocurrency, right? Like, it was like basically a perfect storm to increase the price of crypto. I want to say thanks for the $4.99 PLN Super Chat sticker. Thank you, good sir. So I think 2025, lined up with the election, due to those factors, we'll see something similar. As far as the next couple years, I think it's going to get way worse. I think 2023 is going to be a pretty difficult year for everybody. It'll be the most opportunity. A book I would suggest would be Outliers. Obviously, like I think Joe Rogan talks about that book. It's by an author named Malcolm Gladwell. There's some things you can pull out of that are extremely interesting. Like, for example, when we saw the industrial age, what we saw was basically the generation of basically 20% of the richest people that have ever lived were from that time. And that's because they were able to capitalize. They were born at the right time where they were able to see the shift and capitalize on that shift within society. And I think, like, as similar to the industrial age, the digital age is now starting to come into full bloom, and your opportunity is there. And I think there's going to be massive wealth generation that will happen. It's just going to be a fact of, like, are you going to see it, or are you going to be like too old and say it's not worth it, or too young and too dumb to see it even happening, right? Like, that's pretty much how that works out. So there's like a perfect time to be born for all of those things. Even when we talk about like the tech bubble, you talk about, he talks about like Bill Gates and Steve Jobs, and like the importance of them being born in 1955. And that was, put them at the right age to where when, mainframe computers started coming on with timeshares, that they were able to access those. Also because, Bill Gates had a private school with one of the only timeshares in 8th grade that he was able to go program on for free from 3 a.m. to 6 a.m. every day. So he hit his expertise at a perfect timing for that kind of tech bubble. And like, there are these things where some of it does just come down to that timing and taking advantage of it. So it's like opportunity, meeting that preparation, but also like a little bit of luck, right? Like, I guess that's part of the opportunity that goes into it. Anyways, a super interesting book. Highly recommend it, because like for me, I'm using it to figure out how to set my kids up, right? Like the concept of like, he talks about like the 10,000 hour rule, which is equivalent to about like 3 hours a day for 10 years. And then you become an expert in that field. Funny enough, that lines up with my YouTube channel as well. where it took 12 years for YouTube to take off, and I was working on it about 3 hours a day for those 12 years, you know. I'd get done with work, I'd go home, I'd work on YouTube. It just took 10 years for it to really do anything. It didn't make any money for, 11 years. So I was like, oh, well, I see it there. Okay, where else can I apply that? Can I apply that with my kids, right? Can I find something that my kids enjoy doing that I could get them to do for 3 hours a day while they're under my roof, right? So that in 10 years, they're an expert in something, right? What is that I could get them to do? Ideas like that. And that's it for me. Like, there's generational wealth, but a lot that comes along with generational wealth is how you raise your children too, I think. So trying to figure that out. Not that I'm doing a good job. These are ideas and I'm still trying to figure it out, right? All right. So that was a fun one. Billy says, at Simon Tech, how difficult would it be to actually change the line of code in Bitcoin that hard caps at 21 million? You'd have to convince all of the miners to vote on a BIP to make that change, and I don't think that'll happen. At Son of a Tech, what I mean was what will happen with other tokens like Ethereum. Ethereum network, when an ETH goes proof of stake, can't find a 99-cent sticker, only the $2.99. Weird. There should be a 1 or a 99-cent one. But it could be your geographical region too. So nothing happens to the tokens on Ethereum when ETH goes proof of stake. I mean, as far as like, they're still just going to be there, right? It's just moving that execution layer over into the same bucket as the consensus layer or whatever and making those work together. The tokens aren't going to really change. Now, pricing could change, right? That could be a completely different thing, right? But nothing effectively, like, it just has to make sure that they update the code to make sure that they're communicating with the right nodes. At Son of a Tech, what 2000 watt PSU do you recommend and what PSUs do you use? I use HP server power supplies, 1200 watts. I wouldn't recommend many 2000 watt power supplies, except for if you bump up to the 2400 watt power supply, you can get one from LolMiner that's a server one with breakout boards, and those are good, but not like a traditional power supply. Rad CPU Man says, Ask Simon Tech, thank you for pointing out the clips on the channel. I have the classic projector film look yesterday. Hadn't noticed that. Yes, sir. And we put the little number at the end to make it clear. Rad also asks, will ZIL NFTs work with Trust Wallet? I haven't tried them with Trust Wallet. I have mine going through ZIL Pay. It's all I've accessed them through. Gaming Vid says, Ask Simon Tech, I think anyone here will regret not having Ergo before October. I don't know the October significance, but I do think that Ergo will be, so let's talk about that, right? Let's talk about why is Ergo important, right? Because we have Ethereum Classic, which in theory, everybody could move over to developers and so on if they wanted to. But users, right? So let's talk about users and let's talk about liquidity pools and DeFi. Like, is there a DeFi ready on Ethereum Classic? Not that I'm aware of. There's NFTs available, right? So you got ETC planets. That makes sense. But a full proof of work coin that has DeFi available already, pretty low, reasonable fees, liquidity pools set up for additional earning, solid security in place already. Ergo makes a lot of sense, and it will be the only proof of work coin that has all of that stuff ready to go. Billy says, Ask Simon Tech, how difficult would it be to actually change the... Okay, we talked about that one. At Simon Tech, what is your payment threshold in Netta? 10K? I don't know what the payment threshold is. You mean when you get paid out after mining it? I don't know. 3mil says, Ask Simon Tech, I know you're just a dude, but I would like to hear your take on it. Which one, 3mil? Oh, okay. I think we already talked about it, right? Let's see. Answered that one. Nick says he's thinking of liquidating his Ethereum to get a 5700 XT or 3070. Any insight on expanding with fiat capital versus liquidating crypto? Just in your experience, of course, not financial advice. So if I had to redo what I just did, all right, so here's where it gets tricky is the timing. I'll tell you where I won. I perfectly timed this previous bull run as far as purchasing hardware. To get into crypto mining this last time, I sold everything. All of my cars, all of my everything. Anything that was worth my motorcycle, I sold everything. I was sharing a car with my wife. I would take the, if I had to, take the bus to work or get a ride from a coworker. I sold everything. And then I went online and I found the GPU that nobody wanted at the time, which was the RX 5700 XT MSI version, on a site called ProVantage, where I could pick them up for $300 a pop. I could buy thermal pads to fix their thermal issues. And I spent every evening after work making a YouTube video and then sitting there until 2 a.m. replacing pads on GPUs and spinning up cards. I did not put any crypto collateral in because crypto had not gone up. So that part I did correct. All right. And that was during the bear market in 2020, right? And then into 2021, it took off. So cool. That's obviously, if you can time that, great. Now's the time where you'll be buying cards, right? So then we get into you've been mining. Should you liquidate your crypto to invest in more? And that's kind of where it gets questionable, right? Because my strategy now is to fully pay for the farm with anything other than cryptocurrency. So that cover the power, cover the rent, cover the hardware improvements, all that outside of it, and stack the crypto. And the reason for that is I don't want to sell it because I personally think that, and this isn't financial advice, we will see the increase of price in crypto skyrocket in 2025. So my goal now is to stack as much crypto up until 2025 while also still trying to expand the farm with whatever traditional finances I can. So that's kind of where I'm at as far as that goes. Patrick says, Rich Dad, Poor Dad is a great read too. Yes, I highly recommend that one. Obviously, like the top 3 on my list right now is like Sovereign Individual, Outliers, and of course, Rich Dad, Poor Dad. Like those 3 are like my top books. If you like go and you want to figure out like what's in his head, just go read those 3 books and then you'll have a good idea of where I'm coming from and what my perspective is. And it's important to understand the perspective of the people you listen to on YouTube, I think too, because you may disagree and you may have better points, and like we all have to learn together, and maybe you guys have some book suggestions too that I can check out as well. Dan San says, that's Simon Tech. The kids can learn how to make digital assets on games and rent them to for a break. They can play Minecraft on future Noxa server. There you go. And get crypto. Yeah. Golden Goose says, Ask Simon Tech, after showing the charts of how much it costs to produce a Bitcoin, do you think there's a big chance it could drop even more? So those charts were outdated. I don't think that they're accurate. I'm waiting for newer, more updated information. Patrick says, Ask Simon Tech, generational wealth is parents teaching their children how money works so they can spend their lives utilizing it, not reinventing the wheel. It's very hard to break out of like the way you grew up too, right? So like I had a very weird upbringing where we were extremely poor young, and then my dad made a lot of money when I was older, maybe like high school age or whatever. And maybe junior high. But when I listen to like Outliers, they have an entire section on like the way rich kids are raised versus like the way like poor kids are raised. And like I could relate to both sides because I remember it, right? Whereas like when I was very young, for example, the way it was is like the kids are doing their own thing. The parents are doing their own thing. It was like, go out in the backyard and play, right? Just like there wasn't like, if I was into something, it was more like, okay, cool, he's into that or whatever. Now my parents did something a little bit different, I think, than most of the other parents in that income bracket did. Is they got me into like t-ball, for example, right? But it was always like, don't question authority, right? So you don't, like typically like the poorer class will be more inclined, and this is regardless of like race, religion, or anything else. You are, as like being raised as a poor child, like they were pointing out when they did the study, like you are just not supposed to question authority at all. So what that ends up putting kids into a position of is then they just stop like asking questions too. So they're in class, the teacher says something, maybe they don't understand it. They're afraid of authority to a certain extent, so they don't question whatever that teacher is asking, so therefore they don't learn as much, right? So they put themselves at a disadvantage with that line of thinking, whereas the middle class and but especially like the rich will be like, okay, you know, when you go here, make sure you question them. And another thing was like, they always pushed like, if the teacher says they're doing bad in class, they don't necessarily blame their kid. They go talk to the teacher and figure out what the teacher wants. But if like a poorer kid is doing bad in class and the teacher says that, then the parents will just be like, why aren't you getting your work done? What, you know, and blame it on the kid. There's like little things that are like extremely interesting in just the nuance between them all. I think there's a balance to raising a good human being though, versus just a, what would you call it? A rich one, right? So I'm still learning. I still got to work through it and figure out I'm going to reread the book, I think, and actually read it instead of just do the audio book, because there's some things that I really need to grasp as far as concepts go. Billy says, that's okay. We answered that, Billy. We answered that. Nick, thanks for the $1.99 super chat. Brandon says, ask Simon Tech, how viable do you think 5600 XTs are going to be by the next bull run? Which coins, to your knowledge, are 5000 series better to mine with? I'm only up to 12 GPUs, all 5600 and 5700 XTs. So there, excuse me. So there's a shift in GPU technology that is happening right now. And that is Infinity Cache and just cache in general. So L2 cache on the NVIDIA GPUs are going up to like 92 megabytes of L2 cache. What significance does that have though? And that's where I sit and start questioning. I'm wondering, you know, from the algorithmic choices of crypto, the shifts in that, the miners, when do they start leveraging it? Now, for the 6000 series was the first series from AMD where Infinity Cache really became a big thing. No miners and nothing really took advantage of it. But now with NVIDIA getting into the game for that, does that change the way some of these miners are programmed? And does the 6000 series end up being like this hidden gem of GPUs that we pick up? 5000 series doesn't have that technology, but what the 5000 series does have is really good, obviously, memory bandwidth for the price. So I think they'll still be good no matter what because of that memory bandwidth to price, right? Your 5700 XTs are pretty much on par or close enough for power to hash rate ratio to the 6000 series. And I think they'll be viable still. I'm not selling any of mine, but I did do 5700 XTs over 5600s. I only have one rig of 5600s. And then as far as that goes, that's kind of where I'm at. Brandon, thanks for the $5 super chat. Says, thanks for what you do, man. I know a lot of people appreciate you all been doing, myself included. Thanks, man. That's why we're here. Billy says, ask Simon Tech. Oh, dude, we answered that, Billy. Please stop. MMO stars, I'm not 100% sure, but I guess there is nothing to cache during any of the popular mining blockchains. Well, that's what I'm saying. You would have to have probably, there either has to be like something the miner can do to leverage it, right? Or there has to be a new algorithm. And there's a possibility that that happens. AZ Miner says, that's not a tech. You probably covered it, but I was late. What are your thoughts on Ergo and Flux AMA? So obviously that's going to be really cool. I think it's what, hobbyist miner, correct? But if we're talking about what that could end up meaning, is that could end up meaning a Flux parallel asset on Ergo. And I think that would be amazing. A Flux parallel asset on Ergo would be dope. So that's kind of where I'm at as far as that goes. Kevin says, that's Simon Tech. Do you think the 480s and 580s have viability, or would it be better to sell a system with them? I don't know that you're going to be able to build and sell systems with them because they're very outdated for gaming, etc. That being said, I think they're also about to be very outdated for mining, so I wouldn't recommend picking any of them up. Plus, they're extremely finicky. Like, if you've run Polaris cards, like, I think, like, obviously Bits is really good at running them, but they are extremely finicky. Like, it's not like, so at least like with the 5700 XTs, you can pretty much do the same memory timings across all of them and just flash the same BIOS onto all of them and it's going to work. Mod one BIOS, flash all your 5700s, call it a day. On the Polaris GPUs, it's like every single individual card needs a different BIOS. So like if you're going to do the 580, 480 thing, like you want to buy all of the exact same type. So you're not like sitting there modifying each BIOS individually. And even then you could buy all of the exact same Sapphire models, for example, and they all have different memory on them, right? And then, so then you're still having to do a different BIOS for each one. It's extremely annoying. Emil says, ask Simon Tech, do you have any recommendations on when you move out of your home into a separate location? Seems like a long road at the moment. I'm worried about rent and stuff. Obviously, some of the issues I'm having is rent, right? Like I'd be profitable if I had rent. Not very profitable. We'll be talking about it on the first. That being said, it's a growing pain that has to be done to be able to expand as well. And if you're not going to rent, you have to buy. Is a good time to buy right now? Not necessarily. I think personally, and not financial advice, that we're going to experience a crash in the housing market. So from that perspective, I don't want to buy anything. The other thing is like renting gives you a couple of advantages over buying as well, which is access to typically larger entities doing the negotiation with power companies for installs, etc. That can be extremely beneficial, especially if you're trying to get the best power generation, like moving to a 3-phase, right? You're going to be able to offset those costs because typically if you're working with another company, like if you're trying to rents from some place that has like a lot of property, preferably has multiple businesses within one location, to where things like getting internet installed can be subsidized, right? With larger contracts with the company. Getting power installed can be subsidized with contracts with the rest of the other companies that are in the area. These are the advantages you get from renting that allow you to scale up quicker without as much upfront cost. So, for example, the location that I'm at now, there's other businesses there. We didn't have internet out there for like 6 months. So I was using hotspots, which worked, but wasn't ideal, right? To get internet installed, I called the internet company. They wanted $40,000 to run the line. But because a whole bunch of other companies came in and the landowner, right, went in and was like, hey, I have X amount of clients. They all want internet. Can you come and install? Then Time Warner or whatever it was, right? Time Warner's not a thing anymore. But anyways, they come in and they do the install for all the clients because we've all signed up to utilize that internet. And I don't have to pay that $40,000 cost to run the line. Whereas if I had bought that property and it was just me out there, I'd have to pay it. The same thing happens with the power company too. An upgrade to like 3-phase is going to be extremely expensive if you're the only person that needs it. If you're in an area or a complex where multiple people need it, then you get to reduce that cost. And so that is like why I rent, so I can scale faster and a little bit easier. All right, boys. Thanks for watching. Be sure to hit the like, comment, subscribe, and notification bell down below. We went like 40 minutes over today. I have a couple calls. If you guys want to schedule one-on-ones, be sure to go to sonofatech.locals.com. You can schedule those out with me there. I'm going to go take a couple cases out to the farm. Hopefully try to do a little vlog out there and get it going. But I'll see you all next Tuesday.